Allyson, Laurance, and I'm here with Ian Lee from IDEO CoLab. Thanks for joining us today, Ian.
Yeah, thanks for having me.
Great to have you here. Would love if you just give a bit of background about yourself and the work you're doing at IDEO CoLab now in the crypto and blockchain space.
Sure. Yeah. So actually, our paths reunite because I used to be at Citigroup as well. Starting in 2014, I joined the venture arm, Citi Ventures, out in Palo Alto, and helped with the company's labs and other programs kind of related to innovation and investing for the bank. During that time in 2014, I was pretty early assigned to look at Bitcoin and cryptocurrencies and what the potential implications might be on the financial services sector and the bank specifically. And over the 3 years that I was at Citigroup, I ended up leading a lot of the initiatives related to blockchains, distributed ledgers, crypto networks, and things like that. Working on a couple investments, obviously collaborating with a lot of the businesses on different internal initiatives that we were building. And also as part of a initiative called Citi Connect with the Citigroup's TTS group in 2016 and 2017 with a bunch of folks that I'm still in touch with today. And during that time in 2015, actually pretty early, I formed a partnership with IDEO, Fidelity, NASDAQ, and we launched a new division of IDEO called IDEO CoLab that was focused on understanding what the human-centered applications of decentralized technologies like blockchains and crypto networks would ultimately be, years into the future. And so I was collaborating with them while I was at Citigroup for a number of years. And ultimately in 2017, I ended up leaving Citigroup and joining this division of IDEO in late kind of 2017. And that was right around the time when IDEO CoLab was starting to collaborate with a lot of early stage crypto founders and startups. And so we really kind of doubled down on that. And ultimately in early 2018, launched a venture capital fund focused on blockchains and crypto assets. And I've been leading that team with a number of others since then. So we've been investing in the space for about 2 years now. We have a little over 30 portfolio companies at this point. And what we do is we invest in them, but we also help incubate them to get to market, get customers, get adoption, and all those things. And I think what's been interesting along the way is that as we've been at really the tip end of the spear of decentralization, crypto assets, blockchains, and things like that, we've also had the opportunity to collaborate with a lot of corporations that are a part of our network on their own blockchain initiatives. And more recently, as we were talking about earlier, we've started to get looped into some initiatives at a government level around things like central bank digital currencies, which has been pretty interesting because that was one of my focus areas when I was at Citigroup back in 2014.
It's funny, it's continuously on the docket. We just got off earlier calls discussing that as well with corporates and how you think about it with the Citi construct. But maybe to dial a little bit more into that, I think there's a lot of different ways of thinking on the cryptocurrency circuit and blockchain circuit, whether it's tech lens led or monetary policy led, bank or consumer led, right? So be interested in hearing kind of your thinking when you think of it from a future state lens and the way IDEO approaches this. How are you working with some of these corporates on fashioning what does it mean to set up a construct of a stablecoin or CBDC in their network? How should they be thinking about the various drivers? What are you seeing from your lens and how you're doing that?
Yeah, it's the most important question, I think, as it relates to any technology for that matter. I mean, if you think about IDEO's history, I mean, IDEO as a firm started in the early 1980s, and what it became famous for in the early days was doing a lot of the early work with Steve Jobs and Apple around designing the first mouse and also the first laptop and so forth. And when you think about how IDEO approaches new product development, new business development, like things like this, it starts with people at the center and what people and humans and society needs first, and then thinking through the product, the technology, the business model, et cetera, kind of after that. And so that's core to who IDEO is and how we approach developing new products, solving problems with startups and businesses. And so as we think about decentralized technologies, blockchains and cryptocurrencies, we approach it in the same way, even though we're also investing and working with them on the tech and on the business model and on the monetary policy, as you say. And so what that means is the lens through which we approach this is we first think about what people need and what the world, what businesses, what society needs first, and really imagine what that future looks like. So IDEO has a lot of methodologies, capabilities, expertise in this around design fiction, design thinking, human-centered design, like all these methodologies that it's essentially built over the last 40 years. We use that to then understand what the future state should look like. And then based on that future state, we then invest in companies, we design the technology to meet those requirements and design the business model and consider essentially the monetary policy to meet those demands. But we don't start with the technology, we don't start with the business model, we don't start with the monetary policy first, which I think a lot of other players are sort of starting with that angle. We think that the most important thing to do is think about what people actually want and need first, and then go from there.
I think that you see the value of the solution in terms of the consumer need, right? But the consumers aren't necessarily thinking about all the back-end systems or regulations, but oversight that might be needed for protecting to deliver what they see that end state. How does that conversation come into play, right? I think there's a lot of other angles there that perhaps maybe you and I as a consumer don't think about into a delivery of, I just want to send money where I want and when I want.
I would actually challenge the statement that the consumer value proposition is clear. A lot of these companies, startups, big businesses, even governments, are sort of making certain assumptions about what the value proposition of a digital currency, central bank backed or otherwise, are, without really thinking through that. I mean, we've seen over the last even 5 or 6 years, different corporations, different governments launching CBDC or digital currency experiments, and ultimately those things not working because they're not being adopted by consumers because the value proposition wasn't clear. Namely that, like, why would I use a digital currency over things that I'm already comfortable with, like a credit card or an existing bank account? And so I guess my point is that a lot of work still needs to be done in thinking through and designing what the value proposition for consumers or businesses actually is. But once, to your point, that's actually discovered or figured out, then it's about how do you implement the technology and the application in a way that the consumers and the businesses will actually adopt it, and it won't create so much friction where it's like, even if the consumer benefit or the business benefit is really real and significant, they won't get so frustrated with the user experience or the product to the point where they won't use it over an existing or traditional system. So what that means is, on the consumer side, for example, abstracting a lot of the technology, abstracting a lot of the regulatory issues, things like that, to the point where it sort of meets the consumer in a way where it's very familiar to them as like a traditional consumer fintech application or experience, where it's a matter of a couple clicks of a button and you're immediately able to use the digital currency system, whether they know that there's a digital currency powering it behind the scenes or not. And so that's where a lot of I guess our work has come into play, is helping businesses, helping startups, helping governments think through how to abstract the technology while delivering the end user benefits of this as compared to traditional systems.
Mm-hmm. And certainly I think you've seen more global governments proceeding on this path faster than the US, not to say it's from a time frame perspective, but I think there's a decent amount of social background fashion in how they're open to CBDs or CBDCs, or how they see that factoring into their population. I guess if you look at it from making it mainstream. You know, you've written a lot of things about the future of finance is decentralized, and maybe it doesn't need to be mainstream to be accepted, right?
Mm-hmm.
How do you think about getting the current players to the table? And I think mostly from the bank and regulatory side, and they do have different stances on here. What are kind of the steps you take to get them to the table to think about this new world when you look at it from a decentralized future, bringing it back to current state? What are those steps?
It's a great question. I think that what's going to happen, like the development of most technologies, is that the adoption of it is going to start at the edges before it starts at the center. And we've seen that historically with the internet, with mobile, with lots of different services that we use today. I mean, it looks like kind of a game or a toy, or it sort of looks ridiculous, and a lot of people dismiss it. And it often starts in these markets that are not in the developed worlds, and really gains traction kind of in these narrow pockets or narrow communities. And then ultimately those communities sort of take it on and grow to the point where they become so significant that the traditional system can't any longer ignore it. I mean, I think that honestly, that's what happened in the banking sector with fintech. I mean, when fintech first kind of came onto the scene over a decade or more ago, I mean, people kind of dismissed it. Like, people thought that existing incumbents would be able to easily launch sort of internet-based competitors and just swallow the small players. And today we now are living in a situation where companies like Square, Robinhood, and whatnot have really eaten a lot of the incumbents' lunch. I think that we're kind of at the first inning of a 9-inning ball game with decentralization. I mean, it's still on the fringes. I mean, people still dismiss it. People still look at it as kind of like this cute little toy that will never scale. But, for example, decentralized finance about 4 months ago had about $1 billion under management. That's now grown exponentially to about $11 billion under management in a span of only 3 months, with no signs of stopping. And I think that if you fast forward maybe 2 or 3 or 4 or 5 years from now, we believe that decentralized financial systems are going to be a much larger part of the global financial ecosystem. And you're starting to see different companies, whether it's, Coinbase is as a traditional sort of blockchain or crypto startup, but you're starting to see bigger companies taking note of it. I mean, there are a lot of banks that are pretty front foot on this. There's a lot of obviously asset managers that are starting to build up internal crypto teams. Like, for example, Goldman Sachs recently appointed a head of digital assets and is building out a team right now around that. And I think that, it may take some time, but over time, as more and more financial activity moves onto these decentralized networks, some of which will be native, like, trading of cryptocurrencies like Bitcoin and Ethereum. But there's also activity around, for example, bringing traditional assets like stocks and bonds and mortgages onto, blockchain networks. You're going to start to see these two worlds collide. And I think for now, the traditional world probably thinks it's too small and probably won't pay attention to it for another 3 to 5 years. But that's, during that time, entrepreneurs and different startups are going to continue building, and it's going to continue growing. And then, we will probably see ourselves in a similar situation to fintech, as it was 5 years ago with the financial system again.
I think there's no negating the evolution of technology to meet that, right? As you're seeing the technology rise and its capabilities. I guess maybe dialing in a bit on the privacy security component, right? That tug and pull between, we need to know the actors in the space, who's sending to whom, but in kind of direct a comparison to the nature of these blockchain networks that are vastly against knowing who's interacting, the identity of those. How do you see that playing out in some of the work you're doing with governments and corporates now, and kind of showing that adoption?
Yeah. So not a lot has changed since when I was at Citigroup, actually, and looking at even networks like Bitcoin, which back then, that was really the only thing. The general approach is twofold, or maybe there's like three kind of scenarios. The first is accepting that decentralized finance is just a thing, like Bitcoin and Ethereum and some of these networks. I mean, they're just going to be out there and live there, and so it's just a question of like, how do you respond to that? How do you design for that, assuming that these networks will proliferate and grow, as opposed to thinking that you can shut them down, because they can't, since they're on a decentralized network of operators. So that's kind of like one approach, and I don't think that there's a lot of progress there, with the exception that I think what's important, and why we want to play an important role in the design of decentralized financial systems, is that they should be designed to benefit people and to help people. And so that's why we want to take an active role in that, and why we think a lot of other people should start taking an active role in it, even if it seems a little bit scary or a little bit niche. The more traditional approaches to decentralized finance or blockchain networks also lives in the space of obviously creating permission networks. So that's been a thing for a very long time. A lot of these government CBDCs, a lot of these enterprise solutions tend to kind of be in that space of a permission network, where they choose who can operate and interact with the network. And we think that makes sense, actually. I mean, to be clear, our perspective on the future financial system is one that is on a spectrum of completely centralized to completely decentralized, and also permissioned kind of hybrids in the middle, and everything in between. And so there will be a role for, and always a role for, both permission and centralized networks. And so what I think a lot of these enterprises and governments are looking at are creating permission systems and thinking through how to design a system that is not centralized but is more distributed, and how to get kind of the system distributed to the right set of operators, so that they can determine who to let in and let interact with that network. And then the last part, which is I think orthogonal to both of these things, and this is stuff that we talked about when I was at Citigroup in 2014, is that you can't regulate these networks. You can't regulate a decentralized system, but what you can regulate and enforce around are the endpoints of the system, right? The on-ramps, the off-ramps, and those kinds of things. And that's been kind of the approach of most banks and regulators for the last 6+ years in this space, and I think that will continue to be the case. Really kind of focusing on and off ramps and exchanges like Coinbase or other applications that enable you to go from fiat currencies in your bank account into a crypto asset like Bitcoin and Ethereum, and also investing in capabilities that actually analyze these networks, like Chainalysis and another company called Blocknative, that's looking at either on-chain activity or this thing called the mempool, which is pre-on-chain transactions, to understand kind of what's happening once fiat currencies are converted into crypto assets, and then those crypto assets then get used in these different networks. And so that's what we're seeing, and will likely kind of shape how incumbents and also regulators approach this going forward.
If there were some key points you thought you'd hope you reach in 10 years, what would be your wish list, or where do you see us making some incremental moves?
I'm a little bit skeptical that we are going to be using digital currencies or blockchains to make payments in our everyday lives. I think that that's one of the that was one of the goals, I think, of Bitcoin and many of these networks, and still to this day. But I think it's going to take a really long time for that to happen. And so that's something that I think some folks would hope would happen in the next year, or maybe 3 years ago, or expecting to happen in the next 5. But I actually think it'll probably be more in the kind of like 5 to 10 year window. And so what that means is a lot of potential applications that consumer payments would rely on, like commerce and things like that, might be a little bit further out than closer to home. I think the things that are going to happen in the more near term are applications, obviously, in the financial services sector. I mean, we're starting to see that already with the explosion of decentralized finance. I think what is going to be really interesting in the next 3 to 5 years is where decentralized finance at a consumer level starts to bleed over into adjacent areas. And so as I mentioned, we're starting to see some activity that's popping up in the area of gaming, which is pretty interesting. I mean, that industry is actually very big and growing. We're also starting to see some interesting adjacent applications in the area of e-commerce and also, I guess, social media and the intersection of social media and decentralization. We think is going to be really interesting. So there's going to be a couple markets, kind of, again, these toy narrow markets that pop up that seem sort of weird and unrelated, but ultimately become and grow into big things. And so it's going to, in my opinion, start in decentralized finance and then start to move into these adjacencies. At the same time, on the kind of corporate level, I think what we're mostly seeing are two things. One is where blockchain infrastructure can be used to replace existing legacy infrastructure and make it more efficient or more transparent. The ROI on that is, in my opinion, sort of lower than something a little bit more disruptive, but I think that companies are going to start to move to that. The other kind of area in the traditional corporate world is, I think, taking that one step further, which is reconsidering how certain infrastructure is built and operated, and thinking a little bit more progressively, not fully decentralized, but more distributed, whether that's in the financial system or insurance or something else. And then the last area is that we see a lot of banks and asset managers that are actually going to be entering into the crypto investing space, right? So giving their customers access to Bitcoin, Ethereum, other crypto assets, and creating products around those crypto assets is something that more and more traditional financial services companies are going to start to do over the next 3 to 5 years.
Ian, thank you for your time today. Great insights. Looking forward to continue chatting with you on this.
Yeah, me too. Anytime.